Good morning, everybody. It's Jack Gleason, Startuptrading.com. It is 9 o'clock in New York, half an hour before the bell. March 31st. It is the last day of the month here, so we have potential end of month rebalancing. Last night, guys, the big event that really moved some of the currencies, especially, was the non manufacturing PMI and the manufacturing PMI out of the Chinese markets. Now, this number last month came out on a weekend, and it was an absolute crush. To be honest, uh, this number is almost hard to believe. Everybody knows that the Chinese don't exactly tell the truth about their data, but uh, China is back in an expansionary manufacturing um, situation. So they printed a 52. Everything above 52 for PMI, or I'm sorry, everything above 50 for PMI is considered expansionary. And this was apparently the highest number since 2017. So something good news if it's real. Who knows if it's real? So for economic news today and last night, we had CPI numbers out of the Eurozone in the French, German, Italian CPI. Also, we had current account of the Great Britain pound last night and final GDP quarter over quarter. This morning at 8:30, Fed announcement, which I wasn't actually aware of what this is. I don't know exactly what they're announcing, but apparently there's a Fed announcement. And then at 10 a.m., CB Consumer Confidence, Chicago PMI at 9:45. And then this evening, we're going to have the monetary policy meeting minutes out of the Australian dollar. And that's at 8:30 East Coast time with building approvals. And then I don't know how to pronounce that, but I'm just going to say Caxon manufacturing PMI out of the Chinese markets. And then we have the Tonkin manufacturing index out of the Japanese markets. Tomorrow morning, ADP non-farm employment change. This will probably be a market mover Wednesday. It's an hour and 15 minutes before the bell. And then we're going to have the ISM manufacturing at 10 a.m. So keep that in mind. And then also, guys, remember, just like last week, what's going to be our big expected um, news event of the week. I think one of the more important news events of the week is the unemployment claims that are going to be coming through on Thursday. Were all the people that filed for unemployment. If you guys remember last week, it was 3,283,000 jobs lost on the week. There is not even an estimate right now on how many jobs were lost. So that's on Thursday. So just to give you guys an update on some of the news events here. Let's go ahead and begin by taking a look at the S&P 500 and talk about what we had going into yesterday. So we obviously had um, this full 50% retracement that we talked about in yesterday's trade plan video in the morning. And then really the best trade was that next halfway back. And that was first thing in the morning. After that, we just did not get our next measure move. Instead, we started to trade extensions. And those extensions were from 25.67 half to high. They traded here. It was really sloppy. And then it traded again to target. And we had a third time. Third move never completed profit targets. So what am I looking for at this point today? I'd like to see the full 50% retracement long for the week. And that is from the low of Sunday to high. Okay, there is that level. It's 25.40 quarter. And then you could also argue that there's a potential traditional from 24.95 to high, but that hasn't even traded. So I'm going to mark up this 25.65 half with just a support level. I don't like to have two fibs that are too close to each other, so I'm just going to mark this up as a support level. This draw does line up with the previous high, okay, that we broke out of. It's also within the bar of the leg start. So this 25.65 would be a double confirmation level for me because of that. It's within the bar of the leg start. It's at the previous high. So let's mark that up. 25.65 half. Okay, we'll see if we can get down there. Moving on want to go over the VIX. The VIX is still in its daily halfway back long setup, okay? 45.40 is that setup. With inside of that setup, we are actually holding an hourly long sequence from last Tuesday's low. Last Tuesday's low in the VIX does not coincide with the ES. There's not the same patterns. There's still this 45.40 if we retest it that exists. One of the possibilities that I see happening in the ES, and maybe it happens today, but the ES has not traded our resistance level we've been looking for yet. We haven't traded it. It's 26.55, and that's really why there hasn't been, in my opinion, much short selling or many sequences out of this high. So there is still that 26.55 half resistance level above, and this is a gap fill. Let me just remind you guys what all of these levels are. It's the next traditional short on the daily. It's a gap fill from the Friday the 13th monster truck rally. It was huge. And then it's also just, the beginning of a pretty significant move down. So this level still hasn't traded. Maybe we'll get up there today. It's going to be very important to see what happens after we trade this level in the S&P. Basically, what shorts will need to do is break whatever the sequence is, like we broke today. So there was an extension. The extension broke, so technically there would be a valid short here first thing this morning because the extension broke. But whatever these sequences going up into that high would need to break so the market could confirm that resistance. Otherwise, there is the possibility that we come all the way up into the full 50% retracement short in the ES. That's 27.86. There's a possibility that we get up that high. And it takes rallies to create sell-offs. Who knows? Maybe the lows are in. We're just going to take it one day at a time and be aware of the levels that we know will have participation, or we anticipate that. Moving on to the Dow. The Dow, the only level I'm going to look at is the full 50% retracement long from the low of Sunday night to high. Anything else I'm just not really interested in. Okay, there is that full 50% retracement on the daily chart above this resistance level, which is 22,573. Where does that level come from? That level comes from the halfway back from the March 3rd 50 basis point rate cut. It's right above us. And if we don't hold that, the next resistance level is 23,815. Okay, so if we do break out of these daily resistance levels, guys, we'll see how heavy the squeeze is, but there's a possibility we get up to those larger resistance levels. That would be where we would go from here to here. Moving on to the Nasdaq, backing out the hourly here. The Nasdaq, on the long side of things, I want to pay attention to, once again, just that Sunday night low to high for our supports. That Nasdaq is 77.61. That's what that level is in the Nasdaq. 77.61. Sorry, I am dyslexic. 76.61. 76.61. And as far as resistance goes, where is the full 50% retracement short in the Nasdaq? If there's any market that's going to get there, it will be the Nasdaq, because the Nasdaq is the closest to it, and that is 81.8675. Okay, that would be that full 50% retracement from the high of 2020 to the low. This is a resistance zone I drew up last week. I'm trying to, I think it was a leg start. Yeah, just the high of this candle. Excuse me. Corona. Wow, traded pretty nicely. That was just basically a leg start I had marked up. But yeah, the only level I'm interested for the long side right now is 77.61, full halfway back long. Moving on to oil. Now, oil has all of these, and I would like to refer to them as stack targets. We have the full halfway back short from the swing high of March 11th to low. That gave us a downside target of 1678, had a perfect reaction. Then that swing high from 2845 to low had a 2464 halfway back. We sat on that halfway back for 3 days and then finally began selling off. We have made a new low. This is the lowest low. Yesterday was the lowest low in like 20 plus years. Pretty crazy. First time oil traded under 20, I think, since like 99. Amazing. Anyway, the next 50% retracement would be from that Wednesday's high to low, and that's going to give us a 22.26 resistance zone. 22.26 resistance. So I have that set up with an alert, and that is what I'm looking for in CL. Moving on to the USD JPY. This is from the laser setups in the, I think I put this in the laser setups. Anyway, it's an extension here, and it's been front run twice now. But I was looking at the low from 110.44 to low. Traded once to target. Twice was off that 38.2. Just ticked it and just got smoked. Same anchor new low. 108.78. I was watching this 50% retracement because it just lined up with this previous high. We have not quite gotten to that level yet. We have not quite gotten there. That level still exists as resistance. So far, our highs are a front run of that by 8 pips. 108.70 is the highest we have got. It's the highest we have got. Downside target is 106.33. It's a 200 pip move from here. It's pretty significant. Aussie dollar finally came out of its resistance level, this extension. I'm sorry, yeah, there's a daily extension at the 50% is 61.78. He went sideways in that. What I'm looking for is the next halfway back long setup here, and that is from Thursday's low. And now we've made a new high in the overnight session to what is the overnight session Tuesday high. So that level at the 50% is a 60.41. Okay, and that is the support level I'm looking at here for the AUD USD. For the euro, we have come out of a full 50% retracement short. We back out from the high of 2020 to the most recent low. It was a 106 or 110.66, and I also had a support level here at the 109.44, which was, I believe this was a next traditional. Yeah. So we had a traditional from the beginning of the move, which was on the 22nd of March, too high. When we completed those targets, we never came into the next traditional. We did technically have an extension, but I always like to watch where the next traditional is anyway. This was the next traditional, and this is the support level that I had marked up and that we ran into so far here overnight. Now let's find the opposing moves. So you had your first halfway back short here. That completed profit targets. Then from the 111.05 to low, we completed profit targets. That swing high to low is going to be our next resistance level first thing here this morning. That is a 109.89. Is a 109.89. That's going to be your resistance. So it's a battle between 109.45s and 109.89s, and whichever way we break is the way the market will trend. Moving on to gold. Really important test here in gold. We have been sitting inside of this extension from 1519.4 to high, and we've been going sideways for a week now. We've been going sideways through a week. The rally rallied extensively. It was a 200-point rally Monday, Tuesday. For us to go sideways after a 200-point rally, totally normal, especially when we have not pulled into the pullbacks. We finally traded them today. Also, we had a futures rollover. This is what happens. This is kind of interesting. So we roll into what is the June contract from the March contract. And when we roll into the contracts, what happens is none of these traders can have a new position long at a price that hasn't traded with any volume. So you will see this often. You will see this is the extension getting front run, never even trades on that Thursday. Then the futures contracts roll. So nobody in the June contract has a long position from the extension that targets 1741. So what do? They literally wait. And they honestly, I have reasons to believe that the price is even manipulated down into that level. And then once it finally is, and those traders get their fills, we then begin our move up. So I think this very well may be a good argument to begin looking for the next leg in gold after the move into this level, which we've been talking about this 1609 for quite some time. This is why we're just going totally sideways, because the price wants to trade its 50. So let's look at the opposing move and what we can do to confirm it. There was I don't know, I would call this the sloppiest halfway back short I've ever seen. And let me just take that high to low. I'm going to use today's high to the most recent low to confirm this support. Okay, so all we're doing is we're confirming this support. You can see there's actually already been some sellers at this 50. Once we break above this 1630, this is going to confirm the support level that leads us up into the 1741. And when we've confirmed supports out of lows, it's something to pay attention to because we've rallied really aggressively after the confirmation of support. We confirmed supports here. We had a halfway back after the confirmation of support, and then we ripped 200 points. Go to the next hourly. I got to go back a little further to show you the other one. We confirmed support on the 28th of February. We traded a halfway back and had a monster rip. Okay, so let me find the last one that confirmed. So we confirmed supports coming out of the lows of the 5th of February, and then we had a halfway back after the confirmation and we ripped. So one of the things that's just interesting is after we finally get a confirmation, the halfway back after the confirmation seems to be a pretty good setup. We're not there yet. This is still the support. This is the higher time frame extension. A break above 1630 and the next halfway back long starts the confirmation process and sets us up for a rocket move for 100 points. Silver, with that, silver has not been rallying because gold, it's really closely tied to gold, right? We are still in the same setup, going sideways. That setup is the swing low from Tuesday. Delete this. Of last week to the what is the Thursday high. And it is a 1410. I'm looking at this point to confirm this setup by breaking the same sequence that I'm looking for in gold. We need to break above the halfway back short for the week. Once we do, confirm this 1410s, which targets 1540s. GBP USD. Let's back it out here. We have an extension from the 119.72 high to high. I was looking at the 50%. Didn't quite get it. In fact, it was a pretty big front run, about 11 pips or so. Anyway, had a huge front run. We had our next halfway back. We've completed profit targets. That European swing low to high is going to be your first long setup here this morning. Okay, 123.50s. And then the USD CAD. Ooh boy, we are running here. we're going to be running into the full 50% retracement short in the USD CAD. And if you guys remember, yesterday we had extensions in the morning trade plan. It was the 140.81s, and then traded to target. We've totally blown out the 141.65 to high. Traded once, traded twice. I'm just going to continue, and I know this anchor looks weird as to why I'm drawing it. This is why I'm drawing it from that anchor, because we had the 140.81s. This is where it traded. It actually traded here, and then we just went sideways. So let's take a look at that. You see how we traded that 50? I can go to a smaller time frame, but we traded that 50 and then just went sideways inside of it. So the anchor is that high. Too high. And I'm not exactly interested in just selling into this 50. I have it drawn up. If we get up to this area, like above 143.40, I'd be a little more interested. But I like the sequence long here in the USD CAD. And because we came off so aggressively, I want to see if there's anything on the daily that would coincide, because this halfway back clearly never traded. So I'm just wondering, I'll get to follow this sequence here. I know there was an extension here. See what this extension anchor does. Yeah, I mean, you can make an argument that the extension from 133.28 has held on our support zone, but we would need to validate that by breaking out of the opposing 61. So long versus a short. And that will do it here for this morning's trade plan. If you enjoyed this content, please give this video a thumbs up. If you're in my trade room, I am going to share the levels. These videos are no longer public. I was making them public for a while, but I'm no longer making them public. I am going to share my levels with you guys. So take care, and I will see you guys in the trade room.